Chakri, do you agree with my assessment that the rotation rally is on? Within that, it is no longer TCS, it is all the way Infosys, and do you think it will remain like this for some more time?
Good morning. They're all very good points, and Infosys is also one of the largest weights in any of the benchmarks, whether it's the MSCI or the Nifty. And a lot of investors have been underweight Infosys versus TCS for the reasons that you mentioned. And in addition, you've seen a buyback now in Infosys announcement, plus margins are beginning to improve. The differential, I think, will continue to improve for Infosys versus TCS in the coming quarters. And now they have their services business back on track, after the tumultuous last couple of years. So against this backdrop, I think you will see a valuation differential. Still, TCS will continue to command a higher valuation multiple, though Infosys will play a catch-up game. From that perspective, there is upside in Infosys.
Okay. What do you think, would be the view then extending out to other IT players? Wipro also is mulling the same?
Wipro's traditional issue has been a lack of liquidity with the promoters, founders owning a significant chunk of the company, and so foreign investors are unlikely to buy in of any sizable into Wipro. And plus the demand trends have also just kind of stabilized. The buyback has kind of provided a kind of a bottom to the stock. But in terms of significant upsides for Wipro, I don't really see it in the stock. And I would continue to stay away from Wipro.
Right. Chakri, have to talk about what happened with Avenue Supermarts yesterday. Do you buy it just yet after that 10.5 to 8% fall? Or do you think this is just the beginning of it all and we will see a fair amount of valuation cool off and a derating in the stock price after the numbers?
If you look at Avenue, their supermarket, their revenue growth still continues to be very strong. On the other hand, if you come down all the way down to the net profit margin levels, they're barely making money. So this kind of tells you 2 or 3 things. In an environment where food inflation, commodity inflation, etc. is coming down, which means their input costs should have gone down, will continue to go down. They are not able to pass on that pricing advantage that they're getting in terms of translating into pricing power. So when a company which is trading at 1 or 2% net profit margins and trading at the kind of multiple it does, I think it's unlikely that you will see any significant re-rating. Yes, it fell. There might be a small bounce back, but I doubt there will be meaningful upside in DMart given the lack of pricing power scenario in the market.
Okay, fair enough. What's the call on Yes Bank with all that talk about Ravneet Gill from Deutsche Bank being the front runner to take over from Mr. Rana Kapoor?
The last time we discussed Yes Bank, we kind of alluded that the kind of, whatever the negatives were kindly known. And there were 2 uncertainties. One, the CEO, which is likely to be announced. And if it's going to be either the Deutsche Bank or even Rajat Monga, it kind of indicates a continued focus on corporate banking that Yes Bank has always been strong. Lately, they've been talking about improving and strengthening their retail presence, but either the Deutsche Bank or Rajat Monga indicates a continued focus on the corporate bank. On the other hand, there's another name, which is that HDFC name floating around. If that happens, then it kind of indicates that they will start also focusing on retail. And Rajat Monga, given that he's been with the bank this long, and whoever comes in as the MD CEO other than Rajat, Monga will provide a very strong second rung leadership, which is very vital for Yes Bank, given that its NPAs, etc., the transition that the bank has to go through in the coming quarters.
Okay.
There were also news reports just yesterday that perhaps Naresh Goyal may be stepping down. Chakri, you know, one can just describe Jet with one phrase, that's work in progress. You don't know which way the deal is going to go, whether it's going to be Tata's, whether it's going to be Etihad or some new player altogether who's going to get Jet. But what to your mind should be the approach for aviation? Do you think they should be looked at trading plays, given the kind of rebound we've seen from October lows, the fact that crude is settled sub that $70 per barrel mark, or do you think there's merit in investment as well in any of these names?
The aviation sector around the globe has remained a trading bet rather than an investment bet, and at various time points, and so I don't think Jet is any different from that perspective. And the Jet and the Indian Airlines do not really have the pricing power to benefit from lower crude prices, and mind you, their debt levels still are very, very high levels. And so against this backdrop, you also have this lender uncertainty restructuring which will happen. So I would not really buy a Jet. Yes, for a trading level, if there is a change in management ownership, or rather if somebody else is appointed as the MD CEO other than Naresh Goyal, there might be some respite, but it's a trading bet more than an investment.
Chakri, I'm scanning through a couple of strategy notes this morning, and all the strategy notes are making a same pitch, which is that government will go all out to get the farmer vote back, which means you will see more, farm social or rural facing schemes. They will come at a cost that will cost government some money, and that cost will in a sense be absorbed by reduction in government expenditure. If the general view is that before elections it's going to be politics, not economics, which will be dominating Indian policymakers' mind, is it time to go easy on government dependent companies, especially construction companies, companies which make road, bridges, dams?
I think there is a tale of two halves. On one hand, you have the banks, where you have farm loan waivers, etc. But I don't think I think that concern is kind of reflected in the evaluations and, more importantly, in the expectations. So whether it is the large PSU banks like SBI or the mid caps like Union Bank, I would still be biased. On the other hand, the EPC companies, you have seen that. In fact, even the IIP data tells you that there has been a slow, while there have been awarding contracts, execution has come down. And execution is unlikely to pick up, and so you're in the coming next 2 or 3 months. So the next quarter is like continue to be weak for these EPC companies. So against that backdrop, it's best to stick with the largest name, which is L&T, rather than going down the curve.
Right. Chakri, I also wanted to understand, I mean, I'm not quite sure how closely you may have looked at the numbers for ICICI Securities, but just wanted to get a sense of what is it that you're making of this drag on profits that they've seen, and the kind of, excessive competition in the space from free brokerages, from free brokerage charges, etc. How do you think a player like ICICI Securities would manage to wade through it?
I think it's a comment which I think is true for all brokerages, which is because of, largely led by regulators. When they continue to cut down mutual fund expense ratios, fees, and that pressure is passed on to the brokerages, and now numbers have come down significantly. It was when I started in this business 20 odd years ago, 25 plus basis points, and now it's come down to low single digits. Now if this trend goes on, it becomes more a social service than anything else. So from that perspective, I think ICICI, having largely a retail presence, does not have that kind of a pricing power. And against that backdrop, I wouldn't really be biased of the brokerages.
Okay. Chakri, good to have you on the show. Let you go on that note.